Good day. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this is for Tuesday, and we are the 19th of May, 2020, and just about 6 p.m., so well closed. We're already opening the stock indices. They're pretty close to unchanged, by the way. But we had a late day break, and these markets were waffling throughout the whole session. The president was having, I guess it was a cabinet meeting in the White House about 2:30 p.m. Central Time, and the market started falling. And I don't think it's anything he said, but I don't know. But the market got spooked about something. Some of the TV announcers were talking Moderna, maybe the market's rethinking that it's not quite what they had talked about yesterday, which prompted a rally with the Fed up 1,000 points. Now, for those of you that watch my morning financial updates, and those are a flash update. I'm not talking my subscriber videos, my regular free ones on YouTube. I made it very clear. I said, you know, you're going to have today, going in around 10 o'clock in the morning, you're going to get Steve Mnuchin, our Treasury Secretary, and Fed Chair Powell speaking to the Senate. And of course, it'll be not what they did in their prepared text. The meat's going to be in the question asked, where they're going. We know they're going to be cheerleaders for the economy. I'm not talking the Senate. We're talking Mr. Powell and Mr. Mnuchin. And that was what's to be expected. So the market's up on that. And the questions got rather dicey. And of course, they're being accused of name it. The Senate's looking to blame somebody for it, like they caused the COVID-19. What the Fed did say is all their facilities will be open this month. We'll see how it works. They need a lot of tweaking. The monies are not getting to everywhere they need to be gotten, and that is a real problem. But that's politics at its worst, and I'm so used to it, what can I tell you? So we got that break. We saw the silver, the gold markets rally, the bonds, the notes rallied. When we look at the energy markets today, at the end of the day, the API numbers came out absolutely flat. Now, what I mean by that is you had a build in some of the stocks in one area, a draw in the other, and they came out to almost zero. So, not a net build, and that's the good number. When we look at XLK, I keep looking at this chart, and I see a gap right here. Now, here's what I'm going to repeat and teach you. If you look at gaps, they don't have to be filled. That's number one. They often are, but they don't have to be filled. This one wasn't filled. This one wasn't filled. This one was, but when it was created here, it came back. This one was, but we have one here that's recent. We'll see if it gets filled or not. But it's like a magnet. You always watch them to see, is the market going to do something with it? Right now, the pattern on the tech sector is bullish. You know, what's going to lead the stock market up isn't, in my opinion, the General Motors and the Fords. You need them to come back to life, don't get me wrong. But it's the Amazons, it's the high-tech stocks. They've been doing it, and they cannot falter. I don't know that they have to go up dramatically, but they have to hold as the others play catch-up with them. And you're watching higher lows, higher highs. You got that in this market. By the way, that's just my opinion. If you take out 90-19, you put the market in jeopardy of going back into a trading range. Until that's done, support right back here into this 92, what is that, around the 92.30 level, 92.13 to be specific. What did you get up to today? This is what we looked like yesterday. And I'm certain, I would say, on the first challenge of a Bollinger Band, I think the pros are going to step out of this market. Watch. Right there, and they stepped out. I don't know what it's going to do from here, but I think that's the smart play, because you're watching as you've gotten to these numbers, the market has gotten thrown back. So until it proves that it's not going to do that, well, the idea of the Bollinger Band, these black lines, is that 95% of the time, the algorithm will keep the trade within it. And therefore, when you hit it, that's where the pros take some money or their position off, and they either redeployed it in that market, other markets, whatever they're going to do. But they'll certainly be looking, and I promise you, they're looking at this gap in there. Traders will look at those things. When we take a look at the momentum from the slow stochastic, it's overbought. So I have a market that is overbought. Both numbers are not over 80, and they're certainly not going sideways over 80. They've hit the upper Bollinger Band for the first time in a while. They came back after the first hits here, and they did ride it. That was a different move, but you also had a bit of a different picture back here, and now you've gone up there. I just look for this to be a resistance area. And no, I'm not calling a turning point in the market. That's not what I'm saying. When I look at the SMH, you have momentum still pointing up. Overbought. Any reading over 70 on the slow stochastic, I consider overbought. What did the market hit? You tell me. I look for the upper Bollinger Band, or the pros to have orders in there to take money off the table. Bingo. They don't look too bad. They look like they were geniuses. In the XLI, you don't have a trend. You're going sideways. Look at how different this chart picture is from these. This is much wider. This is longer, narrower. You try to break out, you failed. You came back to the 18-day average, you're just hanging in there. You have no trend, just a whipsaw back and forth in this market. Let me come back here. In the energy sector, you're trying to make a move up to the upper Bollinger Band. Haven't quite done it, but I will say what I said before. If you hit it, I'm expecting the pros to take money off the table. Why? Because the pattern on the chart is a lower low and a higher high. The market is overbought. There's nothing to be gained by being a hero. You play the probabilities. Doesn't mean I'm right, but that's what I think. Let's go over the QQQ. So yesterday the market has a high of 228.68, pretty darn close to the upper Bollinger Band. I wouldn't be surprised if pros took money off the table yesterday. To make me feel better, they hit it today and it turns right back there. Overbought against that number. Again, this pattern where you get thrown back. It's what I'm looking for. Doesn't mean it will have to happen. Doesn't mean you're not going up. You're bullish on this market. This is a true bull market. It's got higher lows, higher highs, unlike the others, but it is overbought. It's not embedded. Embed and you'll get me jumping on board. It's not embedded. In the emerging markets, again, this pattern, this pipe as I like to call it, you're just whipping back and forth. You'll make a run at the lower band, the upper band. You get frustrated because there's no follow through, and that's the purpose of a pipe. It's to frustrate you, but at the same time to build energy into prices. And as the market builds its energy, it eventually bursts out of that. It doesn't stay sideways. Go back to the VIX last year. Look at how narrow it got, and then you see the breakout. The longer a market goes super narrow, stays in that band, the bigger the energy bursts out. In the gold, here's this band again, this let's call it this pipe. You're hitting the upper Bollinger Band. I have a hard time saying, oh, it's just going to right now run away. I'm certainly not bearish. This is a bullish chart. You got higher lows, higher highs in the chart, but you are overbought at the upper Bollinger Band. You only stay over the upper or lower Bollinger Band 5% of the time. For the life of me, I don't know why people are trying to buy it when 95% of the time it's going to pull back into it, but they do. The gold miners. Now, it's trying to get a breakout. Now, when you get a breakout, it tells you that one of the ways I've discovered is you'll get two consecutive, keyword, closes over the upper or lower Bollinger Band. Haven't been able to do it. It's trying. Now, what's going on here? We had both numbers over 80, both over 80 yesterday, not the day before. If tomorrow both end up over 80, one of the bullish elements kicks in with an embedded reading. But until it kicks in, it hasn't kicked in. TLT. If it comes down to the lower band, I'll be surprised if the pros don't take money off the table. The market's been fighting a battle for a while at this 18-day average. It's not been able to get up to the upper band except one time here back in the March time frame. Most of the time it's been trying to fall, which means higher rates in some manner. It's betting on, who knows? I don't see it. I don't see it higher or lower. I don't see anything on it. Euro currency, lower low, higher high. The futures market went right to the upper Bollinger Band today. You know what I'm going to tell you. I think the pros stepped out of it. You have to sometimes watch the futures and these to get a feel for what they're doing, because a lot of these ETFs are based on the futures and they're not exact. So I'm watching what's here. Now, I like the idea that momentum's up. I like the bias is up. So I'm looking for an ultimate chart setup that might be bullish on this. Let it develop. Put it together. That's your game plan. You know, one of the things I was using today is I had clients in different positions in a soft commodity. It's the cocoa, coffee, sugar. And in the futures, I was looking at pivot points because had them in this trade from a couple of, I think it was yesterday or the day before, and I'm looking at the pivot and I'm going, the market's starting to roll, which is exactly what I wanted to happen because they were short, and I'm watching the pivots, and then I'm watching the support levels, and that's what you get. You get 2 support, 2 resistance levels on it, and then I was looking at my swing lines. And once the swing line rolled, I wrote a special update. I had my finger on the button this early in the morning, sent it out, and I felt like $1 million all day. Then I went to my doctor. What can I tell you? But at least I had made their day. So how do you get this? Well, you just go to our website, www.iraepstein.com. You'll see our free offers. It's a 3-part video series. I teach it in a fun way. It starts off with PowerPoint presentation, then I take you to charts. There's 3 different sets. I teach you the formula, how to apply it, and then how to use it with the slow stochastic. Free. All you have to do also is click up here. It'll take you right to where you want on that for the free offerings. I'm Ira. See you tomorrow.